For 10 years, Bitcoin lived by a predictable metronome, halving, pump, dump, and repeat. But what if that clock broke along the way? Sminston with aka Smitty is back on Bitcoin for Millennials. Our previous episode together hit 100,000 views because Smitty doesn't do hype, he does data. His latest research on the ISM PMI suggests the 4-year cycle many have relied on seems to have been replaced by something much bigger. He reveals why the business cycle has hijacked Bitcoin and what the cost of production tells us about the floor price for 2026 and beyond. We also dive into the gold versus Bitcoin rotation and why the recent red signal in Smitty's charts suggests a massive divergence is right around the corner. If you are enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thanks a lot. Now let's dive in to this episode. All right, Sminston, Smitty, welcome back to Bitcoin for Millennials.
I'm back with Bram, and I couldn't be happier. How are you, my friend?
Very good, man. Yeah, I'm very happy you're back. Our first episode is one of my most watched episodes. I think it's actually number 2, over 100K views. We went through your Bitcoin retirement guide, which was an incredible video. I will also link to it at the end so people can check it out and in the description, because I just think it's really great to, how you put the strategy together. And yeah, I'm happy you're back. I just told you, there's 3 people that I call, sometimes I repost on X and I say, this is my quant, and that's you and Plan C and James Van Straten. So I'm happy you're here. And yeah, I thought this episode could be kind of an update to, and maybe you can give a little background, as to what you're doing with regard to Bitcoin, but, your new insights based on the data. And yeah, let's just go through whatever you found. I have no idea, so I'm ready to be surprised.
I love it. Yeah, it's so great to reconnect with you again, Bram. By the way, it's really high praise to hear that from you, the quant nod from you, from the great Brandon Canstein. I have, the respect is mutual. So I think few people are intellectually producing as much as you are out there in the Bitcoin content space. So thanks a lot for those kind words. Yeah, and I'm happy. You know what? I think last time we connected, the focus was on the retirement stuff, and there's clearly some other areas of focus that I've been spending time on, and I'm happy to walk through the most recent stuff. So
awesome. Yeah,
can go ahead and kick it off, and I'm presenting here. I think you connected with our good mutual friend Plan C. He was a collaborator on this work. It was my first, and I think Plan C's first X article ever. And you're no stranger to that, but we called it How the Business Cycle Quickly Became the Bitcoin Cycle, which is right off the bat sounds very contrarian. Because right now, I think you can see in the space, you've got kind of generally 2 schools of thought, right? Like maybe 2.5 schools of thought. You've got one group who they're 4-year cycle theorists, right? And they think there's something underlying, related to the halvings, perhaps. Maybe some people think it's not related to the halves, but regardless, there's a 4-year cycle periodicity here that is just inherent to the system, and it comes around the same seasonality roughly every 4 years. And there's a few subgroups within that camp, and then the other side are kind of what I'm starting to build out here, and I think it gained some traction. I mean, this article did pretty well, I think. And what my thesis is here, and I'm all totally open to data supporting the opposite end of this, but the idea is that early on in Bitcoin's life, right, since Genesis, the halvings were a substantial drop in the inflation rate, huge. So it actually had an impact on the supply and demand dynamics, which could, if you go back to the miners and their profitability, can have more of a direct impact on price, pushing up those bubbles. And those bubbles are kind of how people generally measure the 4-year cycle. So either from the tops or the bottoms. But basically, the nuts and bolts of this are that there is a 4-year cycle, but it's actually it seems to be more tied to the business cycle, which there's a variety of different definitions there. But I use the ISM PMI as a proxy for that, as a single indicator. Of course, you could make a whole comprehensive, holistic macro indicator out of that. There's different ways to do it. But in this article, we're saying okay, in the early days, basically the halving probably had an impact on driving this 4-year cycle. But by the second halving, the correlation there dropped substantially, and the correlation increased substantially with the PMI. And so basically, Bram, this is probably the most basic and eye-popping way to visualize that.
Mm-hmm. Could you maybe? And I'm actually not using.
Yeah, go ahead.
On the ISM and PMI, like what is it and what makes it up, basically?
Yeah, so it's the Institute for Supply Managers, right, is what the ISM stands for. And so this is the manufacturing index that, if you're looking at the raw PMI index, which I'm sure you've taken a look at that, but you see a time series data. So just imagine this green line here is absolute PMI values, and this 0 line here is a value of 50. So it's like a percentage scale, essentially. If you're below a 50 line, it means that supply chain managers and things like that are being surveyed, and answering to that survey overall, on average, they're doing less business if it's below 50, right? So they're actually, the rate of doing business is decreasing in terms of new order intakes, prices, deliveries, making it on time, things like this. Versus if it's above 50, it means they're on a growth path. It means that their business is actually growing from a manufacturing standpoint. Yeah. And so it happens.
So it's spending of money from businesses, basically.
Exactly. Okay. So businesses that make things, being able to grow that business, right? And so I think the idea is, from a theory standpoint, why is this starting to become more correlated? I mean, you could just see by the eye test, right? Especially if you look at the this third and fourth bubbles here, 2017 and 2017 into 2021. I mean, it's pretty striking, right? And it's starting to build a good amount in 2014. It's not perfect. The Bitcoin bubbles kind of live inside the PMI bubbles, which is interesting. So, but yeah, I guess the theory there, Bram, to wrap that up, the theory is that in times of sort of looser monetary conditions and macro conditions, like there's more of a risk-on environment in general, and so higher investment is warranted by investors, by VCs, by taking out loans for all sorts of different new business. And Bitcoin can kind of be looked at both of a risk-on asset as well as a risk-off asset. Yeah. So that's sort of the risk-on behavior showing still with in terms of these bubbles. Yeah.
Yeah, what I find interesting, I wonder, I talked with Plan C about, I think it was the same slide actually, about how does this also correlate to kind of like the liquidity cycles? Because there's also this theory, and I agree, right? Like in the beginning when Bitcoin was smaller, the halvings probably had a way bigger impact on the available supply versus the people wanting to sell. And as Bitcoin grew to a bigger asset, it kind of became more correlated to kind of like these waves of liquidity. And I think there's also, I just tried to Google it, but there's also this this idea that Satoshi actually launched Bitcoin, whether it was on purpose or not, right? That's speculation, but really almost at the bottom of these larger liquidity cycles that kind of move in like 5 or 6 years. And I've always been interested in that, but I've never really seen anyone really like zoom in on that. But here you can kind of make the relationship, right? If liquidity is higher, if rates are cheaper, more people are going to borrow and, pay and try to grow their company, basically, right? And although it's a risk on time, that's the second thing I find super interesting, because I think in essence, just from the characteristics of Bitcoin and I think Bitcoin is the ultimate risk-off asset, right? It's literally a parallel money system that is totally outside of the actual.
It's both. Money it's actually system. Both. I totally agree. Yeah. So I think Plan C said the same. Like it's both, but I think it's. If you look at the characteristics or like the fundamentals of Bitcoin, I would say it is definitely a risk-off asset. Mm-hmm. But the perception of the majority of people, i.e., not us, right?
is that it's a risk on thing, right? It's an asset.
Yeah.
It trades with the Nasdaq and et cetera, et cetera. And so I think it's quite logical. It's very cool to see it in the data, right? But it's quite logical to still see, with an increase of liquidity, increase of risk, increase of spending from companies, increase in buying of Bitcoin is also present.
My main argument, just to be brief, when I say I think it's both risk on and risk off, I don't think you can see my cursor on here, but that's okay. If you look at the price bubbles, well, it's actually Z-score here for Bitcoin. If you draw a straight line from the left axis all the way across, just cut through horizontally, that's not actually moving sideways here. It's moving according to that 5.9 exponent power law, right? To me, that's the risk off.
If something happened to you tomorrow, could your family access your Bitcoin? Not probably, not they'd figure it out, but with certainty. I've thought about this a lot. Whatever custody solution you are using, inheritance is the piece most people haven't solved yet. Billions in Bitcoin have already been lost because someone died without a plan. With OnRamp, inheritance planning is built directly into your custody setup. Your Bitcoin stays segregated and in your control, secured across independent institutions in multiple jurisdictions, insured through Lloyd's of London, and accessible to the people you choose when they need it. And it doesn't matter where in the world you or they are. You can book a free consultation to learn more at onrampbitcoin.com/Bram. That's onrampbitcoin.com/Bram. Most people stop too early with Bitcoin. They buy it, maybe move it to a wallet and think they are done. But they're not. The real questions are how you're securing it, how private your setup is, and whether you're verifying your own transactions or trusting someone else. And what happens to your Bitcoin when something happens to you? This is the layer that most people ignore, and it's the most important one. That's why I've been working with the Bitcoin Way. They help you set up self-custody properly, including privacy, cybersecurity, inheritance, and even running your own node. And they do it without ever touching your Bitcoin. They're not a custodian. They're your support team. If you're serious about this like I am, go to thebitcoinway.com/Bram, that's BRAM, to book a free call. They'll walk you through your setup, personalize everything to you, and help you get a much stronger position very quickly, whether you're a beginner or more advanced. That's thebitcoinway.com/Bram.
The way that we perceive time, and we can't think longer than usually a few months when we're looking at things like this. We don't understand that it is risk off because we're paying attention to the price day to day or month to month and things like that. Yeah. And so the risk on type of behavior, in my view, is when you start to see these actual bubbles. And that's when you get more of the FOMO, sort of the group think, the piling in, but that's what I mean when I say it's at its core, fundamentally it's risk off, like you said, but I think it has these bubbles are sort of risk on times.
Yeah. Yeah. It's funny, right? Like the underlying thesis and the fundamentals is a long-term outlook, which is risk off. But the short-term outlook for more people than hodlers is risk on, right? So it's just an investment basically, and that's also why, for risk on type people, the price of Bitcoin is most important. They either think it's too high, so they don't buy it, or they think it's low or it's going to go lower, right? And then they also don't buy it basically. So anyone who trades or sees it as an investment, fundamentally, I would say sees it as a risk on asset. Whereas when you understand the fundamentals and why it exists, and when you look at it over a long enough time frame, that's why this next slide I think is so interesting.
Yep.
It is risk off, but you need to be able to zoom out or at least understand the long-term underlying thesis. So yeah, it's super cool to see.
Very well said. And I'm a super visual person, so I feel like half of what I do is actual under the hood sort of coding and the mathematics and the theory and things. But I like the messages that we pull out of the data and the frameworks that we're working the data with, and show what's actually going on. So I had this idea, Bram, where you've seen this log chart, right, with the Bitcoin price before, and you see we call it the line that you can't unsee. We draw a line straight through it, and whatever you think of the power law or whatever, right? the straight line exists. And so I just wanted to take that PMI data that we were talking about before and normalize that to that straight line so that you could see, you see the price and what it's doing into 2027, 2028, going for projecting ahead. And you see in the last 5, 10 plus years what the bubbles of PMI have been doing, and these price bubbles living inside of those. And so, I think it's a really interesting perspective to me, because it's a little less abstract than looking at like something like the last slide where you're looking at these two squiggly lines going up and down. Here it's like in log time, this is what the price is doing. And along that same normalized axis as the x-axis, that's exactly what PMI is doing. So I think it's just a more kind of compelling. And what's to me, what it stands out besides the bubbles, look at the last 3 years, since the bottom of the last cycle bottom. So end of 2022, when I think the price dropped down to like, what was it, 16,000. And I've been calling it a crab crawl since then. And there's this sort of another split camp, the schools of thought, where people are like, look, dude, we had a bull run. We went from 16,000 to, was 125,000. But when you look at it relative to the long term, and then relative to the macro cycle, the business cycle, I think it's been suppressed. So me and Plan C have kind of been using the term pseudo bull run or like a faux, I don't know, I can't remember what he says, faux bull run or something. So to me, it's like the 4-year cyclists as of the last few months have kind of looked pretty good, because they're like, 4-year cycle top's going to hit, just watch. And it kind of like, it's a little painful. But if you zoom in to look, we've had 3 years of contraction, and just since January, it's a relatively short sliver of time, we've peaked above that line. So we hit 52.6, 52.4, 52.7. And you look at the last couple cycles, there's a significant lag here. And so I'm still like really bullish right now, actually.
So what would invalidate, but it's funny, right? But wait, another one. Like, why is there a lag? I wonder if you can correlate also to S&P, NASDAQ, whatever other stuff people invest in, and you could follow, right? Because,
Yep.
my assumption for lag would be, if you've had a significant time where, we've been below, like you can see here on the chart,
Yes.
when you get cheaper-ish money, or the appetite for borrowing money goes up again, borrowing and spending money, is investments the first thing you're spending it on, or are you actually spending it on, whatever you need to fix that, happened in this red part, basically, right? So I think is so interesting, like there's like human behavior and there's just the data. And I think trying to find the connection between it is very interesting, but it's really hard. So I just wanted to ask you, like, what would invalidate this? Because
that's a good question,
I'm following the logic, and I mean, you have a lag now that you're showing. So I would want to ask, like, when would you expect it to catch up, or like what would it invalidate it? Because overall, I think it's pretty compelling what you're sharing.
Yeah, and I just want to say that's a really good question. I don't think, I'm not willing to hang my hat on this indefinitely and say, like, this is the only. I think a lot of people misconstrue, because I've been posting so much on this, because I just think the data is really striking. They go, what's the causative relationship? You're saying PMI drives, Bitcoin price. That's nonsense. And I'm like, yeah, that's not really what I'm saying. I think what I'm saying is that these two are correlated. That pretty much I'm saying that there's a correlation here. And so the question that you're asking there of like, why mechanistically is there a correlation there? And then why would there be a lag in there? I think those are the right questions. I mean, I think first of all, what would invalidate a lot of it? I think if we give it 6, I think if we go to the end of the year and I think if we plummet, if the price keeps dropping down to, say, October, and the PMI stays where it's at, or it keeps driving higher, like if we do a PMI bubble like we did in 2021, 2022, I think and then the price keeps trickling down to October, I would say, okay, there's something wrong with the understanding here. But then there's a couple things in there, right? There are, I think, a dozen or so different questions in the PMI that ultimately get you an aggregate PMI value that can be between 0 and 100. So there's some nuance. Right now, what's driving a lot of the PMI going up is the inflation, the prices, and things like that. So the business is doing well for certain reasons, but in other areas, like new orders are still growing, but the growth of the new orders is slowing, things like that. So there's some nuances to what causes this to go up and down. And then the third thing is that I think for the lag, I think it's a good question. I think it's open for debate. I like to think that, businesses and industry are doing real-time transactional supply chain work to get products out and products purchased, and then they need to see their accounting fulfilled. I think that by the time I think the price bubbles are largely more of a social sort of phenomenon, right? When retail or larger investors or whatever are starting to pile in and pushing the price up, that I think that there's a human sentiment lag there that comes after you start to see the businesses giving you that earlier signal. And I think that's probably my top explanation, but there could be other explanations too, I think, for the lag.
Interesting.
Yeah. So, I don't know if you had any other thoughts on this stuff.
No, I like the next one. I saw the title.
I'm really this is to me an experiment, though. Just guys, everybody.
and maybe one thing to add to that, like that's why I like what you and Plan C do, right? It's again, right there's like people that buy Bitcoin based on a fundamental thesis. There's people that still trade Bitcoin, right? Like there's so many different opinions and levels of understandings and ways that people judge Bitcoin, that it's also interesting and hard at the same time to try to figure out why is this basically going up in a straight power law log line, right? Like, why is that even happening? And I think just saying that, as I do, it's not enough. But like the fundamental thesis is, fiat money will be printed forever. You will be debased forever, right? Your purchasing power is gone forever. Like you need to move out of this system. I don't think that's the best argument for the majority of people, or I also don't think that is what actually drives the power law, right? So what else is there, right? And I think that's just interesting to try to figure that out, because something is apparently happening, right?
Yeah, because the problem with that argument is the problem with that argument is that applies to pretty much everything else out there. Any other so what was special about Bitcoin giving it this specific unique exponent of growth? So I think I think that argument fails. I agree, but there's a lot more exploring to do. Sort of shifting topics a bit. This is something I've been just noticing because sentiment has been so bad, Bram. I mean, you're on multiple platforms. I like to go back to Google Trends, which is just an available data set for anybody can tap into this. And what I just kind of hadn't looked at this in a while, I guess. And I realized that at least for the US, this is US data, the amount of Google searches relative to past years, it's a little bit higher than what it was in the middle of 2021, which I'm kind of like, that's really interesting, especially because I have a really old post, Bram, where I showed the long-term Google search data versus the price data. And the power laws of both match really well. And so I kind of forgot that this is happening in the background, kind of going back to our conversation about kind of risk off and like the adoption that's going on when you're not experiencing a FOMO bubble. I mean, it's sort of like, we are, first of all, the price is right around what it was at the peak from last cycle. And then the way I look at this is sort of a proxy of, okay, people are thinking about this and on the, on their search engines, wondering about the topic of Bitcoin roughly in the same, in the same amount as what people were thinking right off the backside of the last Bitcoin bull run. but we don't think of it that way. And you look at the rates right before the last big bull run, it was much lower actually. So
Yeah. Yeah, well, I do think it's interesting that compared to 5 years ago, we are at literally 50% of what it was, let's say 2021, right? Like the peak,
at the peak,
peak retail.
Like that's a decent amount. I mean, it's more than you would think if you wouldn't have pulled this data up. Yeah.
Well, it's funny, right? Because it's always like there's a peak and then Bitcoin died like 1, 2, or 100 times or whatever, and people lose interest. And I really like this idea of every cycle, whichever one you define as a cycle, how long, right? There's people that adopt Bitcoin on the way up, then it goes down. A certain amount of these new people also drop out, right? They sell at a loss or whatever, and there's always like a new group of hodlers that then make this little step change basically, and then it goes on and on. But like the first thing I'm thinking when I'm seeing this is also there's been a massive amount of FUD as well, right? So you see the peaks here, let's say between 2024 and 25 you have these two peaks of interest, and that's also where the price goes up. Funnily enough, it's about halfway through the actual price movement, right? So that's
there's been so much, and even remember Jane Street. We're all forgetting about Jane Street and like all these sort of negative narratives over the past 5, 6
months. But that could also make the spikes, right? So or like the little spike.
Oh,
like
I see what you're saying.
It could also be that people are like, oh shit, Bitcoin didn't die, but there's new FUD. I need to check it out, right? Because I don't want Bitcoin to win, or I don't want to understand it, or whatever.
It's a good point. It's a good point. Like it's because this doesn't tell you if it's positive or negative news, right?
Yeah, but exactly. So I don't know.
I think when I've zoomed in, I'll just say I think the only reason I would push back on that is that the negative stuff, I immediately jump to see what sentiment is doing, and it causes these really big spikes, like kind of what you're alluding to. But I think
I like
this is
the spike after 2021. Sorry, like I like the spike after 2021, which is literally the double top, right?
Exactly.
It's like super interested, and boom, like it just dropped.
And we had that second top despite like engagement around the topic being half.
Yeah.
So something to watch for sure. Gold and macro, I crowned myself a macro analyst in addition to Bitcoin as of last year sometime. So I'm being a little tongue in cheek. But so I think gold, there's this idea which is true, which is that the Bitcoin bull runs tend to follow gold bull runs. But I think what a lot of people don't see is like it's not obvious when we're having a gold run, and I don't even know if people remember when they've been, because the one that we've had since 2024 has been so gargantuan and historic. There's been nothing like it in especially for millennials. Your podcast is for millennials. It's like I don't think most of us remember anything like this for gold. So what you can do is normalize it for the moving average. So the top plot there is again the residuals. So you can see the true bubbles of Bitcoin, highlighted those bull runs in orange. Did the same thing for gold. So you can kind of trace these to each other. And the interesting thing to me about this is there's been sort of a lag. So this is a squishy narrative, which I totally admit. But the lag between, say, the peak of when, gold starts to cool off and then Bitcoin starts to take off, the lag there has been shrinking and shrinking. And this is just something I put, this might have been a week and a half or so ago, or maybe a little bit more at this point. But I mean, in the midst of gold having its heyday, it actually took like a 25% drop, which you can see here. This is what I was trying to highlight in this post. You see it in the residual plot as well as the raw price plot. Pretty massive drop relative to what gold's been doing. Jump ahead to this. You can see it stand out in the returns, the relative returns. So here I'm showing the relative returns of gold and Bitcoin, the difference between the two.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue.
I feel sometimes that, the Bitcoin adoption is driven by an actual fundamental understanding. A lot of people are not going to like this, but I think you need to do more. I think you need to do more work. Yeah, I think you need to do more work to actually understand Bitcoin. But once you understand it, and like if you even understand the point that Bitcoin is gold with teleportation built in and way more, like if that doesn't interest you, but you're interested in gold, then I don't really know what to tell you. But anyway, like the fundamental understanding of Bitcoin and in its place in the thesis that it has, that I just mentioned, right? Like the infinite debasement of fiat money and so on and so on and so on. I think it takes more time. So Bitcoin is slower, but Bitcoin holders, I think, are growing also when you look at the hollow waves, right? So I think they're more steadfast, and when the kind of like the narrative picks up of, there's chaos in the world or money printing or whatever, many people that haven't done the work just go to the narrative, this is when you need to own gold. And so I think the gold narrative is just, I'm still going to make a video that is gold is a meme coin, right? Because I think the gold narrative is way stronger than the Bitcoin narrative, obviously. And it's also that Bitcoin is just way harder to understand. So I hope that makes sense. Like the bar to actually understanding Bitcoin at a deep level so that you're holding it in cold storage forever, basically, like a lot of OG gold bugs are doing as well. I think that just takes a longer time. So the bar to get to, or how do you say, like the hump people need to get over to get into gold is just way lower than Bitcoin. So this is also why I think gold kind of outperformed Bitcoin in the previous months, because just more people know about it, and they know own gold in times of chaos, or whatever the narration or the meme basically is. I think it's just way stronger with way more people. So that's kind of my thought around this. But then fundamentally, right, Bitcoin is leaps beyond gold, especially in a digital age like 2026. But that's a different conversation. But I just think it's interesting that there is a kind of understanding of the need for hard money or a hard asset, but the step from just knowing you need to have gold in chaos to let me see why they call Bitcoin hard money or whatever, I think it's just too big for the majority of people. So it's just getting into gold is just easier, way easier.
I agree with pretty much everything you just said there. I mean, I don't even know. I think I've always sort of thought that there is a characteristic time delay, right? Like the adoption of Bitcoin, just talking about adoption, which I think is the key to Bitcoin price in the long term. And that we are seeing that. It's just, again, in the short term, we don't really notice it, but it is happening. It's still happening. I agree. And I've always thought that there's a characteristic human brain rooted time delay to gaining that understanding of what money means, how to secure your own money, how to manage the technology. I mean, there's a lot that goes into it. I mean, I don't know if you've probably tried to train and onboard a lot of your friends and family or whatever, but it doesn't happen overnight. And the systems the rails are already in place for gold. And so it's like you get into it because that's the hedge of protection in uncertain times, and that's the narrative. It's got a narrative in place, so it's got the institutions in place, and we're seeing that transition now. But I think with Bitcoin, it always seems to happen around this. It takes about the same amount of time per person to get them onboarded on average.
Yeah,
So
the gold outperforming Bitcoin from 2025, like let's say July 25 to now, I think.
Look at all that red, right? So
could you go longer back? I think that would be interesting, to be honest. Like, could you go back longer and have like certain relationship to whatever happened then? Like, what does the COVID time look like? Is something I would.
That's a good question. I need to make that chart. So you got.
No, but it's interesting. Like, does it change?
That's a great point. I don't think you're the first person to ask. Yeah, I think going back to COVID times, basically what you could sort of infer
like
what
the
you
last
see.
Proper chaotic time is more what I mean. Like, where it was clear to people that something.
I think you know Matthew Masinski's, right? One Base Money. He's excellent. He's also going to be. We're doing a panel with him at Prague, by the way.
Oh, very cool.
It's going to be awesome. But he had a couple charts or whatever, showing the years that gold actually does outperforming of Bitcoin in certain years. And then other years, Bitcoin just blows gold completely out of the water, right? And so my guess is if I were to back extrapolate and show the years past COVID and all that, you'd probably see some speckles of red with a little bit of dips like this, and then it would go back to pretty shallow. But relatively speaking, you would never see anything like drawing down into the negative 20s or 30s, where gold is just kicking, Bitcoin's butt.
Well, this is just why I think gold is narrative driven, if I'm completely honest. Like, it is driven in this time of chaos, like, this is what you need to buy, and central banks are buying, and this and that. And I mean, it's not untrue, but I think there's a different, deeper thesis that Bitcoin plays in, that people that figure out Bitcoin figure out, right? That it's a longer time frame than just the XYZ months where something is happening and there's a global chaos and whatnot. So that's kind of for me, the difference. But I know a lot of people don't like hear me saying that. But I don't.
Well, I think a really good whole other podcast we could do on just like what is going to happen if we have something like a global financial crisis too, right? Or people were afraid that oil was going to go up to 200 and stay up there, and we're going to have a complete global economic meltdown. What does Bitcoin do then, right? That's a good question.
There's a lot of people that say, it would go down with everything, because still the majority of people treat it as a short-term investment type risk-on asset, right? And so a next global financial crisis would be ultimately risk off. So although you and I might think all these people would be wrong in not picking Bitcoin,
they might look right in the short term.
I probably align with that. Yeah, because still the majority of people see it as an investment or a trade. So that's kind of why I think that is so. But yeah, more cheap sets for us, and then later on they'll tell us we got lucky. So
I mean, it's if you look back over Bitcoin's life, to see the amount of negative narratives that Bitcoin has, looking 4 years back, had completely destroyed, and then moved an order of magnitude higher. Yeah. So I have to believe it's going to do it again in a situation like that. It's
entertaining, dude. It's just fun.
Yeah. So this is like basically the same data, Bram, but I actually made it more specific. So I wanted to see when Bitcoin is outperforming gold, is that because of Bitcoin's price moving, or is it because of gold's price tanking, and then vice versa? So underneath, I didn't mean to make these Ukrainian flag colors, by the way, but get the on the downside. The negative values here are when gold is outperforming Bitcoin, but it's split out. If it's yellow, it means that that is due to gold having a surge versus Bitcoin having a tank, if that makes sense. So I figured if I got this specific, and then I zoomed in, of course, since beginning of January.
Yeah.
I noticed this right here, this hodgepodge of sort of orange and then a lot of red ticking up from the blue. Yeah, this is interesting to me too, and you don't really get it from you don't really get it from this. You only get it if you do this. And if you look back at, say, the last 3 years of data, you pretty much haven't seen any of that, and this is around the same time scale that gold has started to go on an exponential trend, kicking Bitcoin's butt. And so this is a hypothesis. But I think this might be the beginning of a gold rotating into Bitcoin signal. And the reason of that is that while it's not the first time we've seen Bitcoin having a small relative run against gold, it's the first time that this has happened in the past 3 years that's due specifically to gold's massive drop. Like that's a first in a really long time. And so that's why I think it's an interesting thing to keep an eye on. And of course, this also represents a huge drop in what did gold's market cap do here, right? And Bitcoin stayed pretty much the same over that.
Yeah, so
I think
that would be my question, right? Like if Bitcoin crabs along sideways and gold drops, would you see this signal, or is this really the divergence between gold going down and Bitcoin going up?
This is basically what you're seeing here, this rise from the blue up into the red here, which is unique over the past 3 years. This is the impact of Bitcoin. Let's see, because this is the Bitcoin gold ratio. Yeah, so Bitcoin staying roughly the same and gold taking a huge relative drop. So that's what the red specifically means. See, gold drop is driving the red. Yeah, and that's the unique signal that you're really seeing from the past month or so. Let's see. So speaking of, this is a new area of research I'm doing, which is looking at the cost of production. And this specific model is heavily inspired by an analyst on X named Kunta, or Paul. I think he goes by Paul. I don't know him personally, but pretty much all he's focused on, I think, for years is looking at cost of production frameworks. And so people should definitely go give him a follow if they haven't already on X. I took his framework where you're basically looking at issuance and difficulty. And I'm building a model that is essentially fit to the bottoms of the different cycles here. So I think we do the fitting a little bit differently between the two of us. I'd like to have a conversation with him. So this is an approximation, I would say, this solid blue line of the cost of production, which you can see traces the bottoms. And the price really doesn't like to go below that very often, but there are periods when it definitely does. So what I did was I think I'm the first to show this, but I actually fit that cost of production data that was generated to a power law, and the power law fit is an even stronger fit than the price itself. So I think it's like 98. It's like 98 point something. And so to me, it's like now you've got an average sort of floor price model, which is kind of cool. And if you zoom in, there's really only been one time that the price has fallen below that quote unquote average floor price, which was the FTX crash, the end of the bubble from 2020, 2021. Yeah. The other cool thing about this is that if you use the cost of production data, or the proxy to it at least, it's a steeper incline for the fundamental power law, right? That it's a higher growth. It's a steeper growth curve. I guess that's the way to put it. For the support, and keep in mind this is all for the support. So the volatility lets the price dance all around this, but pretty much solely on top of it. So that the volatility is all to the upside. But that tells us that, right now we're pretty much right there for the average cost of production floor, calling it a floor with air quotes. But in 2 years, and that's at 70,000 today. In 2 years, it's basically double. So, and that's the bottom floor. So we're going to be almost, 95% chance we're going to be well north of that in 2 years. And then in 4 years, it's going to be 250,000. So anyway, I love to look ahead, and it's exciting to look at, long-term bullish. I think this is pretty much the way we can wrap it up, Bram. I just wanted to tie it back together and let everybody know that I have not forgotten about my retirement content that I shared a lot of last year, and I knew we chatted about. So I pretty much just updated the numbers, but 2025 is in the past. But the numbers have changed a minuscule amount. It's like not even 2%. And in 2030, it's looking like, at least if you are living off a US dollar framework and you are living on the equivalent roughly of $100,000 a year, by 2030, theoretically, according to this, with 7% inflation adjusted, somewhere between 3.5 to 4.5 seems to be the magic number if you're looking at a 2030 timeline for most ages.
And is this,
yeah.
you have to be the age in that year? Is that?
No, that's the age today. So that's in
Okay.
4 years you'd be.
Yeah, exactly.
Yeah,
Okay.
4 years
Yeah,
older.
yeah.
Correct.
Okay.
So
Yeah, nice. Yeah, I love this. So, I mean, I would encourage everyone to check out our previous podcast where we go deep on this and really like lay it out and how it works and also what it's based upon. Right? It's it has the power laws, the fundamental, basically prediction of where the price goes. So, I would love for everyone who hasn't seen it to check it out. And very cool to see you updated it. I think you should, it would probably automatically update, right, with all the new data. But you also told me you're going to make a website, right? Or do you have that already?
Yes.
Where you can do this?
Yes.
Yeah.
Yes. Long time coming. So speaking of a live updated version of this, please keep an eye out for, not to tease again, I don't want to over tease, but very, very soon, Bram, that website will be up, sminstonwith.com, and folks can have various versions and access to something like pretty much just like this. So I'm excited about that. Yep.
Awesome. Yeah. Well, I'll link to your X and also to your YouTube channel. I think you had a slide with the YouTube.
Yeah, I started a YouTube as well. Yeah.
Yeah, awesome. So I'll link to that so people can follow you and check out, any new data and stuff that you post. So I think it's very interesting and just a cool update. I hope people found it valuable. And I'm going to see you in Prague. I think you're going to have a cool talk, and then I actually get to see your face. So I'm looking forward to that.
Yeah, we'll see. My face might start to escape into the public. So, but I'm really looking forward to seeing you in person there, Bram. And I got to say, for the amount, I don't do a ton of these podcasts, but you're absolutely one of my top favorite personalities to interact with intellectually and otherwise. So thank you, my friend, for having me.
Appreciate that. All right, man.
Yep.
See you soon. Cheers.
See you soon.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.